Hey everyone, welcome to this brand new video. One of the coaches at Unger Academy here, and today we're going to be talking about a crucial aspect of building trading systems designed for stocks, and more specifically about managing earnings. As always, before we begin, I invite you to subscribe to our channel, go and click on the notification bell if you haven't already done so, and leave a like to this video. Thank you so much. Hi, we are the Unger Academy, and we teach traders how to make money in the markets. Our founder, Andrea Unger, had been struggling with trading for years until he developed his automated trading method, which he used to become the only 4-time world trading champion. Subscribe to our channel for free tips and tricks. All right, now on the screen, you can see an equity line for Amazon that we built together a few months ago in one of our videos. Now, this equity line was built using a very simple trading system that we'll share with you here. This equity is very nice and very steady, but still has little spikes now and then. We can see, for example, this one below. Let's zoom in on the equity line. Okay, you see the spike? It represents an extremely large trade, much larger than the take profit, like these small trades that grow equity little by little. And what makes these big trades that go beyond the take profit? Well, the main cause is the gap that can occur overnight in stocks. Of course, all the more so if during the market closing period, the earnings are released. On these dates, indeed, the market may be much more volatile than usual, and we may find ourselves, when it reopens the next day, with very large gaps. So let's go and see, for example, what might happen. Here you can see some entries and exits. After that, you'll find something like this, with a profit target taken at the opening. Now, let's say that this event was particularly lucky. If we were to go and see how much the system made at this point, it would be well above double or triple the set take profit. Now, this solution could be convenient in case there are very positive earnings, but equally inconvenient if there are negative ones. So for this reason, it might be very useful to include in our trading system something that recognizes the earnings date of the stock and exits at the end of the session preceding the release of this news. Now, this can be done by using databases that can be found online to go and extrapolate the official earnings release dates. In this way, we could backtest the behavior of our trading system if we had always exited the day before an earnings release. Of course, in this case, it would have been very inconvenient. But again, the most important thing in building trading systems is risk management. And I certainly wouldn't want to take the risk of a negative earnings release, as what recently occurred, for example. If we went and checked all the equity curves, we would see, for example, towards the end, something very similar here, with a single trade much worse than the other stop losses. So we could go and add this small condition, namely, if we found ourselves at the earnings date, we could exit our system with a set exit on close, which means exit at the end of the session. So let's compare our previous trading system with the new trading system. You can see that I added an end of day exit here and on the day before, to be a bit more sure that there isn't extreme volatility also the day before the last day before earnings. You can see that the system, well, it's virtually identical. If we went to look for the other trades and other periods away from earnings, we'd find the same trades. You see this one here, this short entry, and so on. What matters, of course, is, as I said, to stay out of this excessive turbulence. So let's go through the equity line again now. This was the original equity line with these little spikes. Let's compare it to the new equity line, which is this one here, which is more steady and less abrupt, especially towards the end. This system has been out of sample for at least 6 to 7 months, so it was made around the beginning of 2022. So we know very well that the stock market has plummeted recently, but the system seems to be holding up quite well, especially if we take off the risk of having an open position before the release of important news on the stock. Now, lastly, I'd like to tell you how I derived all the earnings dates. Simply relying on the available data that TradeStation gives through a very small script written in easy language, through the keywords get fund post date, I went and got a very simple database, namely a TXT file, which showed all the dates of the earnings from 2010 to the present, and also those of this year, so that my system automatically leaves the market at the end of a session the day before an earnings release. And that's it. And we hope that you did find this video very helpful. If you need to help get started on investing in the markets through systematic trading, as we do here at Unger Academy, I'd recommend that you go and click on the link below, which will take you to a page where you can find some very useful resources. From there, you'll be able to register for a free presentation by Andrea Unger. And also go and get our best-selling book. It's the Unger Method, covering only the shipping costs. And you can even book a call with a member of our team to get a free strategic consultation. And finally, I'd just like to remind you, if you haven't already done so, please subscribe to our channel, click on the bell to stay updated on the release of all our new videos, and leave us a like. Hey, also, please write here in the comments if you have any topics that you'd like us to explore in more detail. And with that, thank you so much for having followed us this far. And we'll see you soon in our next video. Bye-bye for now.